Welcome back to another episode of the Anatomy of the Trade. Today we're going to discuss two things. We're going to look at the market update, S&P 500, and Franz brought a very interesting point with all of those tape reading classes that we've been going through. The idea about looking at the chart from the Pnf perspective and the volume on the Pnf makes a lot of sense. So we're going to look at the juncture today where we potentially could have a change of behavior in the markets, and we're going to just go through that first. And then secondly, I kind of was tired a little bit of showing you guys all of the trades that had some kind of mistakes. So I want to show you today the trade that obviously today is bringing a lot of attention because of the gap, but I just want to go through the logic of how this trade originated, and this is a different time frame. This is more of the long-term campaign, or this big swing that I was trading. So we're going to look at pin interest. All right, well, with that, I still want to say a couple of words about the tape reading course series. We've just finished the first 3 sessions. Today, Gary Fullett is going to conduct the bonus session number 4 for series number 1. There is still time to register until we're actually done in December. So I would highly recommend this. We have such a great feedback. Franz, maybe a couple of words on tape reading course. What are you getting the most out of that education?
Hi, Roman. Yeah, this has just been an amazing course. We start off with, just trying to understand what we're looking at on the chart, but when we get into tape reading, we're actually coming up with, where are things going to be going, and using the volume spread analysis, tying it together with swing analysis, doing it bar by bar first and swing by swing, and then kind of wheeling into looking at the point and figure overlay, which I have just been totally immersing myself in for ever since last Thursday when you went over it, because to me it's so valuable, it's fascinating, and it's really helping me just move to another level, another plateau of understanding what's going on in the market, and how to read it, and look at judging the market by its own actions.
All right. Well, with that, let's just kind of look at where we are with the market. So this is
Let's do it.
S&P 500, and this is a Pnf chart. So let's go through the settings really quick. On the Pnf, we have a traditional way of constructing the Pnf. Our source here is not on the close but high and low, so it means that we're going to have more volatility on the Pnf rather than with the close, and we want that. We want more swings. The box size here is 2, so I usually would probably just try and kind of like figure out maybe slightly different box sizes, like 3 or 1. Usually those are going to be more important to me. And then obviously with the reversal of 1, you have to make sure that on TradingView and on other softwares you have one step back built-in. This is the Wyckoff way, where the column at the minimum will have 2 boxes. Okay, so with that, let's just look at the whole structure. And Franz, what catches your eye just generally, just looking into the first decline and now looking into the second decline on the Pnf?
Well, the first decline is much the kind of reactions within the decline are much more volatile. It seems like it travels farther. And when we look at the volume signature, we can see that there's much more volume, presumably supply, that is coming in for most of this, and then obviously at the stopping point we've got supply and demand as well. So that's what I'm seeing, Roman. What do you think about the first one? The second one is just kind of much more sedate version of the first one, if sedate is a descriptive word.
I definitely agree on the volatility. We could see how volatility has diminished on the second leg down. This is just the function of how Pnf shows us the chart. I would be questioning a little bit the volume signature here, just because of how it just goes down like this. So we would have to maybe double check a little bit on this, but this is what we would do. So on the second leg down, we would want to see, well, first of all, we need to recognize that we're in the area of the previous support. So that's number one. There are quite a few support lines here that, as you could see, they just extend from either the previous stop in action right here or the previous trade-in ranges. This blue line is from the previous trade-in range. So we kind of see that the price fell into the area of multiple supports. And usually at this time, there will be at least some kind of attempt to move up. Yesterday we had a climactic run session where we were just going down, 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 and then we started having shortening over of the thrust into today's U.S. Open, and after that we are starting to rally. So the key for us is obviously going to be overcoming this local resistance. Will it happen or not? But how would we be analyzing using the Pnf and volume what is happening in this particular area? So let's just start with the climactic run to the downside. We have quite a few volume signatures here, and then supply is diminishing. Well, Franz, take it from here. So let's just say that we're maybe like on this bar right here. So what do we see in terms of the big swings? Like 1, 2, 3, 4, 5, maybe 6, 7, 8, 9, and then 10. Let's discuss all of those points.
Okay, well, swing number one is a change of behavior. We see that we're, kind of having a larger move than any previous swing in the downtrend. So it's alerting us to the fact that maybe this down move is running out of gas, and we're going to be entering into a different type of market character, which would be a trading range. So that's number one. Number two is the reaction that follows that. And when we look at the volume signature on those bars, and we look at what the effort versus result is, we see that there's quite a bit of supply that's attempting to show us a commitment below the previous low, and yet what is the result? Well, the result is that it's not able to. So another clue that we've entered more of a support area within this. Yeah, so here's phase A, right?
Mm-hmm.
The next swing looks like phase B. We've got, just a kind of sort of an indeterminate up and down. It's the way I describe it is supply and demand are duking it out, seeing which one is going to be more, be able to assert itself. And we do get at point number 3, we get an upswing that carries us above the previous zone of kind of resistance across that little trading range on greater effort. So it doesn't carry us too far, but it's sort of a, maybe a more bullish sign that, we've got an increase in demand there, and demand is attempting to begin to assert itself. Well, because it doesn't carry very far, we're thinking maybe, we're vulnerable. There's another reaction coming, and we see that right away. And the reaction looks pretty threatening, especially when you look at that last volume spike. But we don't really extend particularly a large distance below the the support of the trading range. So encouraging. And also when we see that, we're thinking there's probably going to be some sort of a better rally because we've had this, supply exhaustion, and now maybe demand can move us higher, and that's what we see in swing number 5. It's a minor sign of strength or uptrend action, one way or the other. It's a better swing than we've had at any point to date in the trading range, but it's not occurring on kind of institutional levels of volume. So maybe we're thinking maybe even sort of a technical rally. I guess that maybe that would be right or not, I don't know. But so we don't really have the demand that we need to move us significantly out of the trading range, and we see that reversal, that first red down column that tells us that this move is over, and it occurs on slightly higher volume, but not terribly. So we're thinking supply is still here, and demand is really not enough at this point to overcome. So we're going to have another downswing, which occurs, and it carries us into point number 6. And this is yesterday, right? Or is this today?
This is today's, but this is still pre-US market, so this is probably a European session.
Okay. But actually pretty encouraging, because we're seeing this, increased attempt to move price lower, and it doesn't really have much of a result. Then we want to see, well, what's the what can demand do after this? And demand comes in at a little bit higher level than previously. So that's kind of encouraging. It doesn't really extend beyond where we can say that it's overcome any previous levels of resistance. So we're going to think about maybe there's a test coming. We see the test at 637 on a lower volume signature. Again, just a minor expansion, looks like a spring. And we're thinking at this point, maybe this is encouraging for the whole trading range. Maybe this is phase C. And we see this recovery coming out, this upswing into number 9, which is able to push above the high of the trading range, but not significantly. So there's a bit of a reaction. The reaction is on a pretty high level of supply, but look at the result. Just doesn't take us anywhere. So, we're thinking, looks a bit bullish to me. So I don't know. What do you think?
Yeah, really great analysis, Franz. So obviously, I could see how you've been spending, your time going through the Pnf. So it's really good. And this was a very interesting rally, kind of like a little bit of a fluke in terms of breaking out and then coming back. So this would be a typical, false sign of strength type of rally in potential phase B. The next price action is all the test to the downside with, as Franz has said, very little result. And look at the volume in general, right? So we are not into the US session yet, but even at the open rate here, we don't have as much selling anymore. And then right away, as they push it down and they're creating a marginal lower low, right away in the US session, we are moving up. So there is a lot of bullishness in this type of action, and it doesn't require as much volume to actually do that. So this constitutes a possible change of behavior, possible change of behavior. We would need to confirm that. How do we confirm that? Well, obviously just local confirmations overcoming, the previous highs, committing above. But more importantly, we definitely need to commit about this cluster right here. 3310 would be something that would be desirable to overcome, and then maybe consolidate here for some time. Observe the supply, whatever supply is going to come here, and you kind of can see now how we went from a big picture. We were looking at this two moves to the downside, and we were saying, okay, well, in the area of the support, would we have some kind of stopping action? And what we do is we go to the smaller time frame, and we're trying to decipher all of these swings that we have here in this formation. And we're trying to use the volume and price action. So really good job, Franz. That was so awesome. So, and let's just see whether that's going to materialize or not, whether this is going to go into a trading range, maybe break to the downside again, or would we have any confirmations to the upside? And that's why confirmations are so important. You don't necessarily want to jump into the waters right away, unless you're doing some kind of probe positions. Okay, well, with that, let's come back to our slides, and let's look at Pnf now. So Pnf has been an IPO in 2019. We kind of have like a very typical IPO behavior where at the beginning of the life cycle for the stock, there is more of the downward movement. We see how there is quite a lot of selling and buying at the same time. I thought that this was probably the first significant buying that was done on the way down below the IPO price. And they're just basically saying that, this is of interest to us. We are accumulating, positions, and you subsequently see that there is additional accumulation that's going on now on the way up. As the price goes to the new lower low, obviously on the COVID decline, we are thinking if COVID would not have happened, what kind of price structure would we have? And we probably still would be above, this low right here. So COVID is just a very unique event. It kind of disrupts the price structure on almost all of the charts. You could see this, in a lot of patterns that were in accumulation type of patterns, and then they just being destroyed by COVID. But with that, we kind of, with this lower low, if we would be looking at the downsloping trend line, we would be thinking that this was probably, a shakeout or a sprint type of attempt relative to this support. I don't want to kind of label this whole range right here. Some of my students do this, but I think that here, just work with principles. So it works as a sprint or a shakeout. It commits to the downside, and then it recovers really quickly up. And you could see the test, and then you could see a good rally that actually, I would say that this rally even better than this one. Why? Because it's a little bit bigger, it's more sustainable, and it happens on less demand signature that was required, to push the price here. So that tells me that supply in general has been exhausted, and the price movement up and the way how the reactions unfold slightly different than what we've seen before. So that shows bullishness. And then a negative event comes on earnings, the reaction to earnings. And if, before on earnings, when the reaction was bad, we kind of seen a much bigger reaction. in the current setup, which happens at the same price level, which also we want to note, it happens on the diminished supply signature, and the result is much, much less. It doesn't gap down as much. I know that visually, from the point of view of that day, it might not make sense, but we as day traders would want to notice something like this. And we definitely want to analyze these two analog events. And then obviously the recovery from it suggests that confirmation is in place, and we are coming to the resistance, and we are resting here. And this is where we're starting thinking about opening the position. And our targets first are, this area right here, anything above 34, 35, 36. And we know that most likely we're going to overcome this. And I'm even thinking that, we could use 1-to-1, something like this, where we would be thinking, this relationship to this relationship of the effect, and this would be the highest target for us, at least for now, just on a purely, technical analysis basis. So let's go to pin interest at that point. This is where we are. This is where the first position was opened. So, Franz, what do you think? What would be the strategy here? How could we size up this position to the point where, if we're correct, and we're correct in a meaningful way, we want to have, a very big size? What do you think?
Well, first of all, I agree. This is I use the CAN-SLIM approach for my stock selection, and this has been on my watch list for quite some time. It's a great candidate to be, working on for a profitable trade. So nice point of entry, makes a lot of sense. I think the first question we'd have to ask is, well, where are we going to set our stop? And most likely we're going to say, if the we've had two tests of that $20 area, so for an aggressive stop point, we might want to put our stop at about a couple percent under that, or the previous around 16, depending on how much confidence you've got when you're initially getting into this. So that's point number one. And then what we want to see is, we want to have, because the idea was that we're basically in backing up action right now. So we want to see, can this backing up action hold together, and can we begin to see some some additional demand that moves us out of this, at which point we'd probably think about adding, or if we get a pullback again into the just the body of this little reaction, that might be another point where we'd want to add.
Yeah.
So
Apologies for all of these distractions that I'm creating here, but I'm listening to Franz as well. Yeah, so backing up action, we want to, kind of like start accumulating the shares as the tape shows us, additional points of entry. So let's just see where we are accumulating. So this was the first point of entry. So let's just go through this, and I'm just going to allow the chart to unfold. So really good development. We are overcoming the high. The volume signature is not that high, but it's increasing, and that's what's so encouraging. We want to see the ease of movement, ability of the stock to move up without a lot of effort. This would usually mean that supply is in strong hands, and this bar actually shows that. Some small, deterioration in the demand, but the close is very close. And we now are looking at this area right here, where we could potentially stop, at least for a moment. This was the previous resistance on this gap up on earnings. So we're right here, and we're seeing this bar, that diminishing volume characteristics, so suggesting a reaction probably to 24, just on the top of this reaction into the body of the local breakout bar. Okay, so here's this reaction. The supply is not that great, so that's very encouraging. And even though the bar is, somewhat, big, and it's probably the largest bar off the bottom, except for the earnings bar right here, we're still favoring continuation just because supply is not that big. Possible stop in action here, where we think that, because of this result, we might still have some testing that is going to go on. But again, the volume signature is very encouraging, so we want to continue with this trade and possibly find even some add-ons. So let's just see. Here is a possibility for the add-on, and this is actually where one of the add-ons was done here and here on these 2 days. So
Nice.
the idea here is that we still might retest here, but this could be a lower low in this retest. And obviously we could additionally add somewhere here before the price starts to go up. What's also very encouraging in this picture is that after a slow momentum up, momentum is increasing. And behind that is obviously the demand that moves the momentum up. But, on the previous instances where demand was of the same quality, look at the overextension, look at the momentum extension as well. So this suggests the timing that we're going to move or increase the momentum even more, and that's going to happen now after, this reaction, after the potential retest. So we want to make sure that we're loading up a little bit more before momentum comes. All right, well, let's go through this a little bit quicker. And here is another potential point of entry for us. We're seeing how the spread is diminishing and the volume is diminishing even more. All of this was within the construct of this bar and within the construct of this bullish bar. So we're right where we want to be. This could be another point of entry. And I'm just going to move the bars, and apologies for this mess. So let me just do this correctly. So in red, I'm going to identify the bars where we actually been opening the position. Okay, so there are 2 positions opened here. Let me just do this. All right, so 2. And again, this would be also a very good point of entry for us. Again, we would be expecting momentum to increase. And here is that increase of the momentum gap, and it comes on earnings. And at this point, I want to come back and just look at all of the instances where earnings actually produce some kind of positive reaction. So here and here, and I'm comparing it to this. So Franz, if we would compare 1 to 2 and to 3, what can you say about 3?
3 has more demand. It has as far as the true range, a much wider spread, much larger spread. Better close than number 1. Number 2 did close at the top of the bar as well. But the whatever little, kind of from open to close, it's just staying up there. It did have a bit of an attempt midday to move down a little bit, which is a little bit more that demand tail is a little bit more obvious than it is in 1 and 2, but a very bullish looking bar to me.
Absolutely, yeah, and that would be our thought here, because the idea here is, do we scale out at this point, or do we actually keep this position? So we're facing this dilemma and decision right here. We are actually, about, 50% on the position at this point. And I think that this is going to be, a very common mistake for amateurs, where they are having the profit, they're looking at their P&L, and they're just saying, okay, well, I've made 50%, let me run away with the profit. But I think a more thoughtful analysis, if you're a more seasoned trader, would help you out to stay in this position, because ultimately, we wanted to see overcoming of the long-term resistance, and we're just kind of bending into it where we're not really overcoming it yet. So there's still some potential to go, let's say, above 40. So therefore, this analysis of how the earnings reactions are unfolding is extremely important. And Franz has done a really great job here. So he mentioned the close. Close is better than, let's say, in case number one. And the extension of the reaction to the upside also shows that there is a lot of interest from institutions for this stock. Well, also, if we decide to keep this long term and we see the logic, then short term, Franz, what could we possibly expect here with so much effort coming in?
Yeah, we know that demand is increased, but we also know that there's supply. So that supply has to be tested. We have to see if it can be absorbed. And so we're going to expect some sort of either reaction or, sideways consolidation
Yeah.
before things evolve.
And we just, during the consolidation, we just have to see what kind of character of that consolidation we would have. Is it going to be a flat? Is it going to be down sloping, and so on and so forth? So we're going to go through this a little bit faster. And right away, right here on the test, there is an attempt to put an intraday high and close above the highest close that we've had in this area right here back in August of 2019. Again, a very encouraging sign. Whatever supply came, it has no ability to push the price down, and the test actually stays at this high level. And then we go into the consolidation. Some supply comes in, so that could be an indication that the next low could be a low of interest to us. Okay, so this recovery with the local spring would catch our attention. Here is a potential point of entry on the idea that there's going to be some kind of continuation. The only problem that we have here is supply slightly increased, so maybe we will have some kind of retest first, and then we would be expecting the price to go up. But this is a legitimate point of entry. I would be thinking about that for sure, and I did. So right here we have another actual point of entry. Okay, we're encouraged by the continuation. This bar suggests that maybe we're going to have a reaction back into the trading range. We'll have to look at the extent of it. And it's very severe reaction, so we definitely feeling some heat, with the last position that was open, but we're profitable for the whole position. What's encouraging is that we don't make a new lower low, and that comes on the diminishing supply character. So it kind of reminds us a little bit of this reaction right here. And that's natural. I mean, like, we've made a new all-time high for the stock. We are retracing, but if we are retracing, this move, this is not a big retracement at all. So still long-term bullish, and short-term testing is required. And right on that test, we could add to the position again. So somewhere here, that's another possibility for us to add to the position. The actual add-on was slightly after that. So we were opening the position. Let me just clone this. I think we were opening it right here. Let me just go into my notes. Actually, on the way down. Okay, so here. So as you could see, what's the logic, for opening the position right here? We opened one here and here. This is at the high level, at the level of the climactic action. Look at the volume signature. Supply is clearly diminishing, and we're thinking that this was a potential phase C, the last test of the supply at the level of the support. and this is probably LPS, last point of support, and after that we're expecting a continuation. As we have a continuation, we need to look at the nature of that continuation. Will we have any other reactions? And it seems to me that here's another reaction here, and this acts more as a backup action where we are backing up uh, after a sign of strength. So we want to get in and establish another position right here, because now we're thinking that we're going to start running away, and we're going to start running away, in a big way. So this is another point of entry, and this concludes, those points of entry that we've had for this particular position. The rest of it is very easy. You just have to put your hands uh, somewhere where, they're not going to touch any buttons until you actually, experience some kind of the climactic run. Now, that climactic run could come on earnings as well. If the stock is going to report favorable earnings, you expect that, you're going to have a move up with the gap and potentially into extreme overbought condition. And this is where you want to take profits. Just because if you're thinking that at the point of the next earnings report, we're going to have the same type of gap type of action, this is going to be extremely oversold. And then, overbought. And after that, probably is going to be testing, and probably some kind of consolidation. So let's see, where it's going to happen, and if that happens. Okay, so we're going in, and actually, my apologies, I think that I misplaced this a little bit, so we were buying actually slightly further down. Okay, and going into the report, so we're still ahead. Next gap has some supply. We need to see what kind of favorable or unfavorable test we're going to have, but so far I don't see any supply here. Supply is very, very low, so we're still staying in this position. The earnings are ahead, and please note how the price behaves before the earnings. So there is an attempt to push down, and we're still clustering in the same area between 48 and 54. So this is somewhat favorable. And then today is the day of earnings, and we definitely see a very favorable reaction. So a part of the position was closed today. We were scaling out, and the idea is that we're still gonna hold a portion of this position just because of the favorable outlook, long-term favorable outlook. But we would be expecting that at least a testing action would happen here, at least some kind of trading range, and then we will have to make some kind of judgment as to what are we going to do with the rest of the position. But this has been a really good ride in a very short period of time. We are actually making times 3 around from the point of the entry, and I'm really liking the discipline with which we are increasing the size of the position. We're always doing this on the reactions, after the reactions, and with confirmations. So, and then obviously just scaling out here, taking some profits, makes a lot of sense when the conditions are extreme overbought conditions. Franz, your final thoughts on this trade?
I love it. It's I love the analysis. I love the trade management. You know, I can learn a lot from this. So
Well, and hopefully you guys will learn a lot from this too. Everything starts with just, as Francia said, with the analysis itself, and then you have to execute. You have to know how to actually manage the trade. and that's a skill in itself. So hopefully this was very helpful, combining the analysis, tape reading, trade execution, and just Wyckoff logic. And for this type of analysis, again, come back to our anatomy of the trade. I'm kind of finally showing some of the winning trades that been unfolding for some time and didn't want to really show those, but this is one of the examples that I just couldn't wait to show you. Franz, thank you so much. Great session, and we'll catch you up with the next episode.
Thanks, Ramon.